Hello traders, welcome to another daily analysis. Today is December 7th, which is around 15 minutes past 6 p.m. Eastern Standard Time. So let's get into it. Today was another quiet session during the London session. Now, however, we have the manufacturer production data coming out from UK, which was actually very negative. It was a negative surprise. Then in the New York session, we had the Bank of Canada rate decision, which came out as expected to be unchanged. And another data is the crude oil inventory, which was a large drawdown today. Now, that's just fundamental data. Sentimentally, WTI actually closed down again to below $50 per barrel. Now, regardless of the draw in the crude oil inventory, the reason is because right now the market is still expecting to see more action coming out from OPEC. And then again, this kind of agreement itself has a lot of doubt naturally. So if they stop doing anything to reassure the market that they are going to start doing the oil output curve, people will always naturally start feeling skeptic about the OPEC ability. Now, that's one reason. Another reason is that the only non-OPEC member that have now say that they were going to commit it is Russian. So originally when OPEC was making this kind of statement, this kind of agreement, they were hoping that non-OPEC oil producers were also going to participate for the oil cut, because eventually if every producer participate, that's going to be good for the oil market at large, and everybody can make money. However, that's a very utopia way of thinking, because at the end of the day, people are selfish and the market is based on greed. So far, the only non-OPEC member, Russian, has decided to join and committed to cut. And of course, the reason is because the low oil price has really hurt Russian. On top of that, they've been sanctioned right now by all the Western Europe. So they're really doing badly for their economy, and they're really same situation as Saudi Arabia. They really need the oil price to go up. So that's why no surprise to see them jump in. But you have another large oil producer, basically the US shale producer and Canada shale producers. So they're not joining at this moment. Not only that, we actually saw output rise from the US shale producers as they took the advantage for the oil price rise. So I read the news. It's more like a mouse and cat game. Now, what does that mean is that both parties knows exactly what's going on here. OPEC member wants to reduce the oil output, so the oil price will go up. But they're not going to do that just to benefit the shale producer in US. They know perfectly that if the shale producer is not willing to commit, if they just try to take this advantage, then OPEC is going to continue produce the oil again to bring the oil down. And at the end of the day, everybody gets hurt. So it's really a matter of good faith right now to see if producers can really start on the same table, negotiate on the same table, and really start the game together, because that's really what's happening right now. So, and of course, the oil producer in US are not stupid. They know what's going on here. They're just trying to make a little bit buck here and there, especially for last week, since the oil price did go up quite a bit. So they know that they cannot do that forever. They know that OPEC are not stupid either. So right now, it's eventually, I do think they will come to an agreement. Maybe not on paper, but they will come to an agreement that, okay, if our goal is really to not that the oil price continue to tank, then yeah, let's participate, mutually to at least bring it up a little bit. So I think eventually the producer will try to coordinate. I just don't know how long this effect can be and how effective this can be. But if their target is right now $60 per barrel, which is actually not that far away. We are right at $49.50 right now. So $10 more. We're still far away from the peak of the oil price. So if they just want to reach to $60 per barrel, it's very logic and very reasonable. So I do think it might be reached in the near future. And right now, again, it's just a cat and mouse game for different oil producer in different countries right now. We have another yet green day for the equity market. So again, it's really a risk on sentiment right now, and a very positive strength into the financial market, especially the U.S. market. And as mentioned, no surprise, we are in this December holiday season, and every day you have different comments from Donald Trump. And even you read article from Wealth Management, people actually don't know where to put their bet at this moment. So they really can only follow the newly elected president. And every day he seems to make a lot of good pro-business comment that's really going to help the market. Now, whether it's going to be effective, we don't know. That's really depend on what happens next year. But as for now, the sentiment coming out from the policymakers seems to be quite positive. And that's why it supports the financial market. For euro dollar today, tomorrow is the ECB meeting. So right now, what happened is that the market is largely anticipate for a bond buying program to extend it, but they're also looking for any hint for any tapering. So right now the bet is 50-50. You see that some people are buying into the euro dollar because they are hoping that Draghi will signal some tapering, which means that they are going to extend the bond buying program. This part is mostly for sure, but they might also give us a deadline or at least some sort of hint that they are going to stop the program altogether. And that would be a positive sentiment for euro dollar. But honestly, we don't know where it's going to go, right? It's 50-50 chance. So at this moment, I mostly just stay out of euro because you really don't know, and you have equal amount of seller and buyer. So really the odds is low for you to really predict which way it's going to go. The Italian Prime Minister resigned today officially. He says he's going to resign. So it's not really a big deal for Italy. You have to understand, yes, Italian referendum, the no did play a part in volatility, but by and large, it's not as much as Brexit. And the reason is because you look at Italy's history in 180 years, they have so many prime minister already. I read an article that average the prime minister can be on position for about 1.1 year. 1.1, that's how short it is. So that's basically like a norm already for Italy. They just keep switching prime minister every year. So it's not really a big deal. The bigger deal is about one of their oldest bank is the bailout program. That the financial part is the more scary part for the Eurozone. The political part is not a big deal. They seem to get used to it, to changing the prime minister there. But of course, that's still a negative sentiment for Eurozone and for euro dollar. For pound, British pound, today the data, as mentioned, was very negative. But on top of that, we have the parliament member actually came out and backed Prime Minister May, saying that they would sign a bill for a Brexit. So that's actually a very quite a negative tone for British pound, because what happened is that in Britain right now you have two parts of expectation. One part wants the Brexit to happen as soon as possible, right? They don't want things to drag for too long. Excuse me. They voted for leave, and now they want it to happen. The other part is sort of basically in denial. Like they know the referendum is a leave, but they don't want it to happen, and they know that legally, as long as they don't trigger the Article 50, then the referendum never happened. And now their hope, because the government is saying that they are going to get the Brexit happen as soon as possible. So their only hope is the parliament, and that's why I say that High Court ruling is important, because if the court has already ruled once for the parliament. So right now we're actually waiting for appeal for the government to appeal the previous ruling. So if the court maintained their original ruling, then now the decision comes back to the parliament. So people were expecting the parliament member, because a lot of parliament members are pro-euro. They don't want to leave euro. So a majority of people that voted stay are really hoping the parliament would block the Brexit altogether, so that this thing will never happen. And of course, that's of course against the democracy and things like that. But that's how the politics works. But today, the parliament member actually came out saying that they will actually follow what's happening in the referendum. They will actually honor it. So they will back the prime minister, and they will actually sign the bill for Brexit. Now, I do think, I mean, I'm not British, but I do think that's the right thing to do, because since you know the country has voted for it. But of course, that's going to be negative because you know, it's very straightforward. If Britain leaves, that's gonna be negative, and it's all comparison speaking. If they leave, it's gonna be negative in comparisons to if they stay in Europe. So right now, the prime minister, the parliament members have a lot of them have come out say they will actually back the plan. So that makes the High Court ruling become more meaningless, because even though if the ruling come out as in favor for the parliament, and regardless, they already say they are going to sign a bill for Brexit. So it seems like the Brexit will happen. They also say that they are going to respect the timetable for Prime Minister May. That would be 2017 March. So you know, that means that Brexit is going to happen for sure. It's going to happen next year. That of course will create a lot of uncertainty into the Britain, so into UK, and that would be quite negative for British pound. Now on top of that, you have the fundamental data that came out today that's very negative. So all the things play into effect makes British pound become very negative for now. Now, of course, don't be surprised if the High Court ruling comes out in favor of the parliament. We're still gonna see some, you know, short-term positivity, but right now that impact is not that much anymore. For New Zealand dollar, we have RBNZ Wheeler say that the cash rate was likely to remain steady for some time. Now, this along with the previous GD price and, you know, the high yield currency situation, right now New Zealand is actually doing quite well in comparison with other currencies. So New Zealand dollar is actually a quite strong currency, you know, to buy, because right now you have a fiscal policy that is stable. You have an economic policy. Of course, they still have a risk of housing boom. They still have the risk of low inflation. They still have the risk of, you know, exporting is not doing well enough, things like that. But by and large, it is a quite positive currency. Australian dollar, on the other hand, you know, suffered from last night's GDP data, was actually contracted, I think, the first time in 2008. And that was very, very negative. And on top of that, you know, it's really dependent on the commodity price. But as for now, it's a very negative currency in comparison with a strong currency. For Canada, you know, Canadian dollar, you know, the rate decision was unchanged, but also the statement itself is quite neutral to actually slight bullish, because they were saying that yes, the risk of low inflation, you know, the risk of economics are all there, but seems to be picking up well. And right now, they don't see any reason to cut the interest rate further. So right now, it's at quite a neutral to bullish. Now, I say bullish is because it's neutral and it's going to go ahead with the oil market. And in the oil market right now, yes, day to day, you have this volatility. But in long term, it does seem like they are going to boost the oil price higher. At least, you know, over 50, between 50 to 60. That's more certainly will be the oil price. Whether how fast it's gonna reach there, we don't know. But in the general direction, at least it's going to go up. And for Canada, for Canadian dollar, for general direction, it's not going to go down. It might be neutral, but it's not going to go down. So this, on top of that, then it makes Canadian dollar a quite bullish currency for now. Now, US dollar, again, is another fundamental and sentimental bullish currency. But we did see quite some selling pressure. And it's really, you know, the Fed decision is coming out next Wednesday. So right now, you know, investors are not sure. A lot of large money are exit the market right now. They don't wanna bet on things, right? Because right now, since of course economists are highly anticipated for a rate hike, but don't be surprised if the rate is unchanged, because Janet Yellen is known to be quite conservative in this kind of thing, and the newly elected president and the new fiscal policy really play a lot of uncertainty. So right now, people don't know what's going to happen, so a lot of large money exit the market. That's why you see a lot of pressure into the US dollar right now. For Japanese yen and Swiss franc, the both are still same, very negative, bearish tone in both in fundamental and sentimental, and they were most likely to remain there. And the reason is because they are actually quite happy that the currency is being devalued. It's really gonna help their export business. Same thing as euro, I already said it. So right now we're still bullish for US dollar, both fundamental and sentimental. And the only risk is the Federal Reserve meeting, and you might see some selling pressure ahead of the meeting. Another bullish currency we have is the New Zealand dollar, as again the current economic data and the positive comment from central bank are supported. We're still neutral but bullish toward Canadian dollar, actually quite good currency to buy. We're still bearish toward euro, Swiss franc, and Japanese yen. But because we have the ECB meeting coming up from tomorrow, so we're most likely gonna stay out of the euro for now until tomorrow, which will give us more direction. We're also bearish toward British pound and Australian dollar, and these two are the new bearish currency. And British pound, as mentioned, the negative data plus the parliament comment make it a very bearish currency right now. Australian dollar suffer from the very negative GDP data, and also the commodity price. If it's not going anywhere, then it's going to be bearish, especially versus US dollar and New Zealand dollar. So that's pretty much it for now. And the only risk events, watch out for the ECB meeting for tomorrow, and also watch out any high court ruling or any sort of political events from British pound. So let's take a look at our currency pair. So first thing first, I didn't take any trade intraday because I didn't have any signal yesterday. As you look at hourly trade, it's it's not going anywhere. Well, pound USD actually dropped largely yesterday. So let's take a look at daily chart. Just give me 1 second. Okay. All right. So euro pound again. Sorry, this is that right here. Euro pound. Again, we have another buying power into euro. It's not because the strength. It's just British pound is being sold right now. Now, as mentioned, I'm staying out of euro dollar for now. Euro Swiss, euro. It's just very indecisive. Really no movement at all. Euro Aussie, another inverted hammer, another kangaroo tail. So not enough for me to sell because they both are quite negative. But again, I'm staying out of the euro dollar for now, just to see what's gonna happen tomorrow. Euro New Zealand, another drop day for Euro New Zealand, and Euro Yen. It's another indecisive range bound. British pound, it's a pair I'm looking to short, but not against Swiss franc. Cable, I don't have a signal right now, but again, it's a good pair looking to short. Pound Aussie, have a good signal yesterday, but it's not a pair for me to do anything just because I don't want to. Basically, Australian dollar is negative for me right now. Pound CAD might be good, but I don't have a signal at this moment. Pound New Zealand, as mentioned, I was entering a pending order here. I did not get fill, and so I cancel it. And today we actually have this bearish candlestick right now. This is actually quite good. I'm actually looking to short this one. Again, you have this strong resistant area right here. So all these are resistant area, and it's quite good pair to short actually. I'm still looking forward to short this one if all things are equal. I mean, I'm going to do more analysis. We are just right at this trend right now, but I do like the fundamental and sentimental for these two currency pair. So I am looking to short pound New Zealand. Pound yen, nothing specific. Swiss franc, Japanese yen, nothing specific. Dollar Swiss franc, again, it's a pair to buy, but I don't have a signal right now. Dollar CAD is quite neutral. They both are strong for me. And dollar yen pair to buy. Again, we are in the range bound. Don't really have anything right now. Aussie Australian dollar, it's a pair I'm looking to short. Aussie Swiss, Aussie dollar, I don't have a short signal. Aussie CAD, I don't have a short signal either. And Aussie New Zealand, I don't have a short signal. We're still right here, right here within this triangle. It's still here, still here. It does look like we might break out downward, but I don't have any signal. Aussie yen, I don't have anything right here. Take a look at CAD Swiss. It's a good pair to buy. Don't have anything. CAD yen, again, we are in this range area. I don't have anything right now. UT Swiss, it's a good pair to buy. This looks nice, but again, there's no space. It's sort of like a ranging bond actually. New Zealand dollar, it's not a pair I'm gonna do anything about because they both are strong currency for me. New Zealand CAD, both are strong currency for me. New Zealand yen, I'm looking to buy if we have any signal. We don't have any signal. I mean, this is not a good. It's it's just right at this ranging area, right below this support, this resistance. So let's say very straightforward, guys. Really, I'm looking to short pound New Zealand. This is the only pair I'm looking forward, and the risk is first of all the High Court ruling or any political statement that you might have from British pound. The second risk is the ECB meeting, because although it's largely to do with euro, but that's going to affect British pound, because if you have a negative sentiment into euro dollar, most likely people will buy British pound to hedge it, and vice versa. If you have a positive sentiment into euro dollar, people will sell British pound. So that's the two risks that if I'm going to do, I'm willing to take these two risks. And the real reason is because the RBNZ statement today, which is really a confident statement. RBNZ normally don't come out say this kind of statement, but they came out today saying that they are not looking, the rate is going to be maintained. And then yesterday they have a pretty good GDT price. And in this kind of environment, I do think they are doing quite well. On top of that, the US dollar is being largely sold right now ahead of the Federal Reserve meeting, so that will make New Zealand dollar to be even more attractive. That's the only reason I want to buy into New Zealand dollar at this moment. So that's a risk, always bear in mind. You don't have to take any trade if you're not comfortable about it, but for me, just by looking at it, I do think it's a pretty good pair to short. In terms of today, the intraday trading, again, the game plan is still same, looking to buy US dollar, looking to buy New Zealand dollar. I'm looking to sell Japanese yen, Swiss franc, and euro dollar. But because of ECB meeting, so I'm staying out of euro dollar for now. I'm also looking to short British pound, also looking to short Australian dollar. And another currency you can buy is the Canadian dollar. So just to recap, so that's it pretty much, looking for Cape Compound Duty. And if all things are equal, for members, I will send another London session analysis to you. But if nothing happened during the Asian session, then this is the pair we're looking to buy: dollar, New Zealand, and this is the currency we're looking to buy: US dollar, New Zealand dollar, and Canadian dollar. This is the pair we're looking to sell: British pound, Australian dollar, Japanese yen, and Swiss franc. Okay, guys, let me know if you find this video helpful. If you have any question or comment, feel free to leave below, or else I will be back tomorrow with another daily analysis. Thank you very much. Thanks for watching. Bye bye.